We have with us Mr. Aseem Joshi, the CEO of India Business at GMM Pfraudler, joining us on the show to talk to us about their earnings. Mr. Joshi, hi. First up, Diwali greetings from the ET Now family. But before, I just wanted to get a bit of sense in terms of numbers as well. I understand in your commentary on the con call, etc., you did point out that the next 6 to 9 months are going to be a bit more challenging from demand perspective. Throw us a bit more light in terms of what are you seeing in terms of demand momentum right now?
Sure. So first of all, good afternoon. Thank you for having me on the show, and wish you all a happy Diwali as well to you and to your viewers. So we're coming off of a very good quarter. You would have seen our numbers, 20% growth in revenue as well as EBITDA, YOY. So we're very pleased with that. Look, we're coming off of last 2 years or so with which were very hot in terms of demand from the chemical sector. And that has cooled off a little bit. We're back to what we would say is more normal, right? And that's why I think a lot of people say, hey, has it really slowed down? It's really, I think we have to take a long-term view, and we see that we're coming off a really hot period, and it's more normal now. Having said that, I think next 3 to 6 months will probably will be required to get the cycle up again. We talk a lot with our customers as well as engage at the ground level. And we're very confident that in that time frame, the demand should be back up.
Hi, sir. This is Vinny joining in the conversation as well. Also what I want to understand, if obviously it's going to be a bit challenging in the 6 to 9 months, but you're still maintaining your revenue as well as your EBITDA guidance, then how would you be able to achieve this if we're seeing a bit of a subduedness in terms of demands?
Yeah, so when we give our guidance, we certainly plan for various contingencies. And, we look at our backlog, we look at our opportunity funnel, based on which we've given the guidance. Please keep in mind that GMM Pfraudler 3 years ago was heavily focused and dependent on the chemical and pharmaceutical segment. Since then, purposefully, we have diversified our business, growing into non-glass line technologies. We've grown our alloy business, our mixing business, our filtration drying business, with expansions geographically as well. And that has helped us in being able to ride out these capex waves as they come and go in various segments. So we feel confident of meeting our FY25 guidance, and actually will continue strong growth beyond that.
Also looking at the order intake, and that seems to be a bit subdued. And I'm guessing overall chemical sector is also going through a slowdown as well. Talk to me about how the next 6 to 12 months are likely to pan out when it comes to the order inflows, and which segment will drive it, you believe?
Yeah, so look, I think the pharmaceutical sector first is one that we're seeing green shoots in India. We're starting to see inquiries pick up and specific discussions that have started going forward. So we think that should come back in the next couple of quarters. Within chemicals, agrochem it has seen a lull recently, but we anticipate that as well, maybe in the 6 to 9 month period. Should start coming back. And spec chem, that I think has less of an issue, and I think that should also start picking up in a similar time frame. So in the meantime, as far as I mentioned, we have other businesses. We have exposure to oil and gas, minerals and mining, and we are seeing very strong order inflow from those areas in new application areas.
Lastly, if you can also just give us an indication in terms of your international business, because that seems like has done better. So, what is the indication coming in for the second half of FY24 as well from the international businesses?
Yes. So, when we acquired the international business roughly 3 years ago, we had a plan in place to improve performance, both revenue and margin. And we are very pleased now, with the levels that we've been able to achieve. This has been by the hard work done by our international team. They're focused on operational excellence in the factories, as well as commercial excellence. And that has really worked to our expectations. The international market, like India, also is seeing the cycle, especially in Europe. Having said that, we still feel confident that we have enough opportunity pipelines to continue to meet our growth expectations in the international business as well.
Thank you so much, Mr. Joshi, for joining in with us this afternoon on ET Now. It's always a pleasure having you on the show and giving us an outlook in terms of what we should be expecting from the company going forward.